Well, it was coined one of the most important Fed meetings for some years, but the market has filled its boost with risk assets. Now we move on to the ECB meeting, the Bank of England and the Norges Bank meeting as well, with the market riding this wave of short-term positivity. But can it last? We discuss these themes and more as we assess the trade-off. Well, hi, my name is Chris Weston, Head of Research here at Pepperstone. In a very short while, I'm going to be joined by Blake Morrow from Forex Analytics. And as always, we're going to be unpacking, we're going to be analysing, navigating all the lines, trends, thematics in this mad world of trading. If you like what you hear, obviously hit the like button, that'd be fantastic. And it goes without saying, do your own research. So we're going to go straight into the programme. And I'm going to bring in Blake Morrow. How are you doing, buddy? You well?
I'm doing well. You know, what a great day today.
It's been fantastic, isn't it, mate? And do you know what? We're going to talk about the Fed meeting in a second in Topical Thunder. But do you know what? I just want to, before we revisit our calls from last week, I mean, it just goes to show, right? If I told you the Fed meeting, the outcome, could you guarantee you would have made money in that situation?
Well, no, actually, no.
Exactly.
No, because if you told me, wow, you know, the Fed was going to be as hawkish as they were, I wouldn't have expected today's outcome. Yeah, that was pretty much it, right?
Well, I think they were hawkish, but they weren't as hawkish as the market was talking about. Let's talk about that in a second. Last week in my play of the day, I was looking at going along the Chinese market, the CN50 or the A50 as we put it on out to clients. And it had a really nice start to the trade. I mean, it got up to 16,760, so up about 3%, but it's pulled back pretty much to break even at this point now. For me, you know, I still like the trade. I think China's going to outperform in 2022. I think it's going to be a great place to be for investors. You know, you can trade in and out of those positions. But I think the market was a little bit disappointed yesterday that we heard that the median lending facility had a net withdrawal of about half a trillion yuan. People were hoping for more, you know, to try and keep the stimulus alive. We're hoping for a bit of a rate cut on the MLF. Didn't happen, and people have sort of been a bit despondent by that situation. But I stand by the call. If you want earnings growth in 22, go to China. You're going to get 30% earnings growth. You've got a central bank now that's really willing to stimulate. So I think it's going to be a great place to be for longer term trends. And what were you looking at last week, Blake?
You know, last week I was actually looking at my play of the day was the dollar Canadian on the short side, and to my defense, it actually dropped the next day very aggressively. I just expected a little bit bigger of a move down to the 50-day and the 200-day moving average, and we didn't quite get that, Chris. Yeah. And matter of fact, the dollar Canadian was so buoyant, it rallied to new trend highs as of this morning. And I did actually, believe it or not, I started shorting the dollar Canadian going into yesterday, into today. Well, is that my yesterday? My yesterday, your 2 days ago. Yeah. I have to think about that one for a second. Anyway, I started to trade on the short side. And I'm still actually short the dollar CAD. I am going to talk about it again today. I don't want to give away the entire show, but it's a mover, right? It's a mover. So you've got to play what's moving.
That's right. Well, markets can be cruel to you, Blake. They can be cruel to all of us. But I think let's go into Topical Thunder. I really want to sort of discuss some of the big thematics that's playing through. Let's check it out. Well, I've coined this one, what's the beef? We've got to go into the FOMC meeting, right? You know, I'd love to tap your brains about this. I mean, you're a veteran in these season markets, and I asked you the question before, if I'd given you the outcome, would you have been able to make money on this? You know, people say that you get the facts. I don't think that's going to be the case. But yeah, the market has treated this as if we've been a bit dovish, to be honest. I've got my own views about which and obviously I can talk about this. But, you know, you've seen the dollar under pressure, big reversal in the dollar. Real rates have seen a huge reversal on the session. Gold's up as a result, and the Nasdaq's just gone for it. Apple leading the charge up 3%. And, you know, they've obviously seen that as well. So, I mean, what did you take out of the Fed meeting that moved the market so much there?
You know, I don't know if it was a case of buy the rumor, sell the news. Or in this case, it would have been sell the rumor, buy the news. Anyway,
which market you're looking at, I guess, isn't it? Really?
Exactly. But the fact of the matter is, Chris, we got a huge response in the dollar, and I was watching price action more than anything. And I try to tell our traders, I'm not as fast as an algorithm. So what I'm going to do is I'm going to be watching price. listening to what's going on, seeing some of the headlines. I've got, some people in my team on the Forex analytics team that are like rattling off the headlines and putting them out into our chat rooms and on our platforms and whatnot. But for me, I'm watching price action and seeing the dollar not respond in a bullish manner following the announcement really got me thinking, hey, maybe this was a buy the rumor, sell the news type of event, at least for the dollar. Yeah. And I was happy about that. I came into today short dollars, long euro, long Aussie, short dollar Canadian. But I've been in those trades literally for most of them for the euro and the Aussie for more than just a couple of days. Yep. So I've been playing those and they played right into my hand. But thinking about what the Fed did, I don't know. You say that the Fed wasn't that hawkish, or maybe it wasn't.
I think they were hawkish. But I think they were hawkish. Yeah, I mean, the 2022 dot was at 3. The market was looking for 2. Go further out into 23, 24, and I think maybe there was a few people looking for a little bit more in 2024. Jerome Powell was pretty upbeat about the consumer. I mean, he was very upbeat about the US economy. We're going towards full employment. We're going to navigate and absorb the Omicron situation pretty well. I think the equity market feasted on those comments. But you know what? We're going to get 2.1% on the Fed funds rate by 2024. But we're going to see inflation in the US maintain a floor above 2%. That's pretty hawkish. But at the same time, I think the market was looking for more, which is why we saw that reversal in real rates. Gold's loving it. The question, what we've seen in the last couple of Fed meetings, is that initial response after the Fed meeting can be faded and reversed pretty hard in the next session. So, we've seen a bit of euphoria, very positive flow coming through there. Risk assets have done very well. The session ahead, very, very important to see if it can be maintained. We've seen so many of these reversals play out.
We have, and I think that's good to play on that. And matter of fact, that'll take us into our next subject is the ECB. Yep. And I'm, my topic title here is going to be, can the ECB do the unthinkable? And I know we're not going to be raising rates, but can they even turn hawkish, Chris? I mean, look, PEP is slated to end here in March of this next year. Yep. Will the asset purchase program that's been in place for the last, 5-6 years, is that going to be able to pick up the slack? A lot of my colleagues have said, it's just like taking money here and putting it in another bucket over here. You're just kind of sloshing the money around, but it's still out there. Yeah. I'm just more curious. The ECB has always been, at least in my experience, more of a following central bank. Right. I mean, minus the Draghi doing whatever it takes. Yeah. You got Christine Lagarde. I think she is going to be prone to be a little bit more hawkish, following the footsteps of the Fed, seeing what the Fed is doing. I don't know what your thoughts are, but maybe, talking to your point, Chris, maybe tomorrow is a turning point for the markets when the markets realize, hey, other central banks might be taking some cues here and getting a little bit more hawkish. It's not just the ECB. We got the Bank of England, yep. Norges Central Bank, Banxico. Who else we got? Bank of Japan. I'm missing one. Oh, Swiss National Bank too. I mean, we got a lot of other central banks, coming up. What do you think? Well,
your point there. The unthinkable is basically, in my opinion, that they really give us no clear indication about what's going to happen with the PEP program, and we get this kind of cliff where it's like, well, are they just going to let it expire in March, and we're not going to have any subsequent pick up in the APP, so we're just going to be getting 20 billion in asset purchases from the asset purchase program. We want clarity. We want definition. I mean, we firstly don't want to be listening to Christine Lagarde when it comes to central banks speaking. That's one of the tougher ones to listen to be honest. But I don't see that happening. I think Christine Lagarde is going to, and the ECB themselves are going to give us some clear definition around what's happening with the PEP program, that it will probably expire in March, at the end of March. But what they'll do is they'll create this new envelope, parcel, whatever you want to call it, 100 billion, 120 billion euros, which is going to be additional on the APP, backing up the 20 billion you've got at the moment. And they'll just continue to do that as far as into the end of 2022 and beyond if needed. And I think that, I don't necessarily think the euro is going to move too much on that. But I think that would be my base case. The market, I think, is actually looking for a rally in the euro in this situation. Any thoughts on that?
Well, look what happened to the dollar today. So, anything is possible, right?
Keep an open mind.
The euro actually... Well, I'm actually hoping the euro can stage a rally, but here's the thing. I think everybody like yourself and everybody else is expecting it as well. So when everybody expects it, maybe we will get a reversal.
Yeah, look, I think when we were talking about what's happening with the ECB, I don't know if it's going to feed into any kind of equity moves. I mean, we'll be watching the DAX, we'll be watching the CAC and all those kind of European markets as well, Bank of England, all those factors that, as you talk about there. But one that we're going back to the Fed meeting, and what we have seen is a really, really strong rally in some of the tech stocks. Real rates came down. We've seen bond yields moving nicely off their highs, big buyers coming through. And tech's done beautifully on the back of that. I mean, we're watching Apple as the sort of talisman of tech. When are we going to get a $3 trillion market cap on that stock? We're just shy of that at the moment. But Apple's leading, Microsoft's really helping. As long as those two stocks are going up, the Nasdaq's firing on two cylinders. You've got Tesla doing a little bit better, the memes are doing a little bit better. But, the Nasdaq, everyone was touting this as, on its deathbed, of bond yields are going to go higher and duration assets are going to get slammed. But the Nasdaq just flew. Can it continue, mate?
I don't know. I think that's where the leadership is at, Chris, and I wouldn't want to fade it.
No.
I mean, how can you? It's like, I look at all these tech stocks and it's kind of like that rally that at some point is going to give in. At some point, I feel it as a veteran in the markets, being in the markets for almost 25, 26 years now. Yeah. The way I'm looking at it, Chris, is we are probably marching higher towards some sort of blow off top in the market. And I think that charge is going to be led by the NASDAQ. Yep. Does that mean the top is here? I don't think so. Yep. And so I don't know where it's going to end, but I think we need to continue to follow that money higher, at least in the very near term.
We've got, once the ECB, we've got the Fed meeting out of the way. Let's say a day, we get another day of really understanding. So positioning's done, people have reacted, their calmer heads have prevailed. We get the tomorrow session out of the way. Get the ECB Bank of England meeting out of the way. We get options expiry out on Friday. Next week, if the market hasn't sold off and it's continued to hold a bid in that situation, I think you've got a real risk that people chase this market into year end just to lock in that performance. What are we up? 25% year to date? You've got to get paid, right? And I think if the market hasn't sold off by after options expiry, I think you're going to get people chasing this market. This idea of FOMO,
Chris. No. When you say traders have to get paid, asset managers have to be paid. Look, it's you're either in or you're going to get redemptions. Yeah. You are. If you're a portfolio manager, you're an asset manager. If you're not in and you can't beat the index, you're out. Money's going to come out of your fund. So you've got to be in the markets. You've got to chase. FOMO is going to happen, and at least, if we can get past of all of these hurdles, as you pointed out, and the grinding period between December 25th, right after the Christmas holiday into the new year, that could be a grind higher. It usually is.
I'm looking at Apple. I keep talking about it. It's just, when you've got such a concentration of the weight on the NASDAQ between, 5 stocks or so, but Apple is the driving force of this one. Are we going to get this to $200 by year end? What you've got to remember as well, is what people remember is that you've got all the options heads out there who are going to basically, if this continues to go up, the dealers are going to have to hedge that exposure, and that's something we do need to think about. There's a lot of upside calls being bought that's going to need to be hedged. So Apple has to be on your radar. That could be the driving force there.
Well, I'm going to take it back to currencies, Chris, because, you're talking about Apple, you're talking about the charge moving higher. Some of these currencies that have really been, they've been underperforming all year long would be some of the emerging market currencies, whether you're talking about the Rand, you're talking about the dollar Mexican peso, those currencies, or the Mexican peso and the Rand, they have been underperformers. If we get this, you want to call it a melt up, you want to call it a I forgot you don't believe in them. Santa Claus, I'll call them a Santa Claus rally. If you believe in all that, Chris, and you believe in the big heavy red man, look, how do you not play emerging market currencies that have been, underperforming all year long? Maybe they start outperforming at the very end of the year. If you're going to get FOMO, you're going to get people looking around saying, hey, where am I going to get the best yield? And in currencies, it might actually be the Mexican peso. It might be the South African Rand. Yeah. I've been looking for the dollar Rand to dip down to 16 1560, 1570.
Yep.
On it's a big inverted head and shoulder pattern on a weekly basis, but that's a big drop from where we're currently at. I mean, we're talking to several percentage points lower. Dollar Mexican peso could very easily trade back to 2020 from where we currently trade at, which is around 21. I mean, we could see some moves in these emerging market currencies at the year end. What do you think, Chris?
Well, I do get worried about the dollar because, I mean, as I say, this is one day affair. We've got this euphoria, this positivity, this positive flow that's going through the market, but it could easily reverse. I don't trust this rally or trust this sell-off in the dollar. We're talking about March being a realistic situation for the Fed to raise rates now. Last week we were talking about how many whether it's going to be June and was that realistic. We're now really talking about whether this can be March. The Fed are going to end their QE program in March. And they've said that it doesn't have to be a long window. We're going to get the ECI numbers, the employment cost index numbers in Jan. That's going to be influential. We get two other CPI numbers early next year, and they're going to be both probably above 7%. The Fed could easily raise rates in March. The market in the short term may do an about turn, but then you've got this counter trend. Will that impact? Will that flow impact equities? We talked about the Nasdaq then, but that's something that we're going to have to look at. And if we do see equities pull back because of this situation that we're going to get a March hike, then dollar MEX is going to go higher. But if we get equities going higher and then the VIX pulls back, I'd be certainly looking to go long the MEX. I think it's probably one of the standout EM currencies to be long in that situation.
Well, Chris, you're talking about March. It's still 2021. I got plenty of time to get long some EM currencies, right?
Okay. Well, I just think it's just like what's going to happen tomorrow. We get this reversal. Yeah. So look, I just think if we get past OPEX next week and the market goes, I'm going to bid up risk into year end, that's the time when dollar MEX for me is going to go lower and people want to get paid in that carry trade. And the MEX continue to bang this drum that if you want to go in the EM space, go long the MEX. I think it's probably the place to be. But we'll see. I think it's also conditional. Next week is the big turn. Go into year end. I think there's money to be made in that situation. But let's go into the charts. Let's go into a couple of setups that Blake and I have got on our radar and how we're going to trade those. Let's go to That's a Setup. Okay, so the first one that's on my radar today is my good friend, the Aussie dollar. As you can see here, we've got this horizontal resistance level, 71.72. We've had nearly like an engulfing pattern that's come through post the Fed meeting. It's just really hovering there. It's kind of make or break territory. Now, I quite like the Aussie. I've talked about, and you've been very positive on the Aussie, and we've got agreement there. But, I think a lot of this is really dependent on what happens with the equity markets and implied volatility and also to an extent Chinese markets. I talk about the correlation between the Aussie dollar and the Hang Seng and the Chinese A50 market. We're going to need to see those markets push higher. But we're at this kind of make or break situation. And I think if we can get a close above 71.72, the question then is, are we going to start trending? One of my plays I want to look at is Aussie yen. That looks actually more constructive than we've got the dollar because, as I say, if you get the US dollar continue to find bids and we get the reversal playing through, then Aussie dollar is going to sell off at this obviously clear resistance level. So this is why we wait for the close above this if we're trading off daily charts. If we print another higher high in this situation, then I'd be looking to scalp in and out of what is potentially a momentum move that's playing through. But this is on the radar now. There's no trade for me. I want to wait for the market to close above that level. And if it kicks on, then go for it and scalp in and out of that position. What are you thinking on this one, Blake?
Well, Chris, as you mentioned, I am constructive on the Aussie. I'm long the Aussie. I was buying it just sub 70 cents or right around 70 cents. And I've been playing it on the long side. I think it, technically what you see there, I see that horizontal line, but it's also an inverted head and shoulder pattern, something we've been talking about today as I've been staring at the charts all day. And a break above 72 cents is where I start getting really bullish the Aussie. Now, you got me a little freaked out, though. I mean, you're talking about, hey, is this a one-day aberration? I mean, are we going to get a reversal? If we do, the Aussie is going to be one that's going to get smacked right back down. Again, I'm not necessarily in that camp, Chris. Yeah. I think the dollar actually put in a pretty big reversal today. Yep. At the highs. So technically speaking, I actually still like the Aussie. I think I'm going to have to like it until proven wrong. Yep. And I haven't been proven wrong yet. But if we drop back below 71 cents, that's where I cut my longs because my cost average right now, after all my ads and taking profits and on the current position I have is around 71 cents. We get below that, I can't be long anymore. So prove me wrong, then I'll be wrong.
Yeah, I think you've got to have an open mind, right? And my thesis is that, we could see a continued sell-off in the dollar, but, what we've seen in the last few Fed meetings is we have an initial reaction and then that reaction changes in the session. It needs to be something we have, but we can react as traders, and we don't necessarily just have to prophesize, but we have to react to moves. And if you're wrong, don't stay wrong, cut the position, get out of that. But I think, in this situation, if you were to see a continuation of that dollar selling, it breaks through that horizontal level. I think that'd be a very powerful statement in the market that the market's ready to continue to bid this pair up, and I want to be part of that situation there.
It was, and Chris, you just said something, and before we move on to gold, or we can move on to gold, but I want to reiterate something you just said. Yeah. It's okay, and this is what I tell my traders all the time. It's okay to be wrong.
Yep.
It's not okay to stay wrong.
Yep.
So if you're wrong, cut your losses, get out, move along to the next trade. It happens to all of us. We all take losses.
It does.
So that's good for any trader. Yeah. Now, I want to turn your attention to gold. Is this time we need to buff gold off a little bit? Because, there's been so many gold bulls. I talked to so many traders and economists, and everybody's been bullish gold. Like for the last 6 months, everybody's been bullish gold, and it's gone nowhere. But we had a really key reversal today. It was a false breakdown below some lows we haven't seen all the way going back into October. We hit a Fibonacci 618 retracement. That came in at 1753.55 spot that you can see there. And if we can get above the 200-day moving average, you can see that 200-day moving average has really capped us for like the last 2 weeks. If we can get above that, I'm going to be convinced that gold is moving higher. And I'm going to tell you one thing, Chris, I wasn't watching the dollar so much today. I even tweeted about it, after the FOMC. I wasn't watching the dollar so much. I was actually watching gold's response. If gold would have broken below 1750, I would have been very bullish the dollar. I think the dollar would have came out of its shoes. No matter where it was at, it would have started ripping. But gold really held key support, and that could be that support that holds the Aussie dollar up as well. So what do you think about gold here?
Well, I think if the dollar continues to sell off, then gold's going one way, right? And I'd imagine that's going to be because real rates are going lower, inflation expectations are going to stay higher, and this curve continues to flatten. That's a really big statement that the yield curves are flattening. It's something that everyone should be concerned with, I think, going forward. But I think if the dollar continues to sell off, then gold's going through the 200-day moving average. Without actually taking a look at any other chart, without looking at the dollar, without looking at real rates, yield curves or anything, as I look at that chart right now, my view is that I'd be selling and I'd be shorting into the 200-day moving average. I want to get into the top end of the range, and I'll be just continuing to trade there. I think gold is uninspiring. I think it's lost its edge, and I think you just want to continue to trade there. So I'm not sure if I'm necessarily taking the other side of your trade, but I would be just using this chart in isolation. I would be wanting to fade and initiate short positions into 1800 and maybe just a little bit below into the 200-day moving average. If I just take that in isolation, and I want to just continue to trade that range into year end, I think that's probably the play for me there.
Well, remember, when it gets over the 200-day moving average, don't stay wrong, Chris. We just talked about this. I just want to make sure you adhere to that rule as well.
No, absolutely. I mean, I'm a big believer that if you once the position starts losing, it doesn't feel right. We're trying to do something about it, but understand where your stops are and why they're there and why you're taking the loss. I think that's really important. But I just think perhaps if it gets to the top of there, we'll see how price reacts. But I'd be favouring shorting into that situation. Let's have a look at the Bitcoin chart. I think Bitcoin's really interesting as well. We saw a positive reaction coming through in crypto to the Fed meeting. So for me, you're talking about, is it a hedge against something or is it a risk asset? For me, it's just been solidified my school of thought that Bitcoin and crypto is a high beta risk asset. It's a momentum vehicle. And, as soon as real rates started going down, the dollar started going down, equity started moving up, crypto had a really nice move. Ethereum had a really nice move to the upside. But, you can see that really big spike down. We got below into the sort of 4100s. 41,000s.
Yeah.
And generally what you see when you see those big spikes down is price will go on to retest that level. But we haven't. We've held that with, you can see that 61.8% retracement level coming around 52,000. That to me is the big level. If we can get above that, then I think we bull trend again. I think that's going to be the level. You can see, and what I like about crypto is it really respects key levels, whether it's support, whether it's Fibonacci levels. And you can see here that we got to that 61.8% retracement level. We pulled back. And I think, if we go into test that sort of 50% level of 50,000, we can go on to that 61% at 52,000, and then we can start bull trending again as well. But I think this is a really interesting one as well. So we're consolidating at the moment. I want to see a bit more buying. I really want to see it through 52,000. If we can get a break of that, it's on. I think we're back into a nice bull market territory. But at the moment, we're sort of chopping around. I've got my levels. We're consolidating. What do you think about this one?
Well, it's interesting you talk about 52,000, and I just want to point out, even on your chart, you can see it there in that blue 200-day moving average.
Yep.
That 200-day moving average is supporting Bitcoin right now, and you're right that the upside reaction following risk assets, it is clearly telling us, look, I am a risk asset. I am moving with risk. So now you talk about 52,000, about that previous support, current resistance, that horizontal level. It's interesting, Chris, that 52,000 is actually the previous breakdown point of a channel that I'd been following. That's been it was an ascending channel from May, and we broke below 52,000. So a move back above there, we're moving back into that channel, and that's going to end up being a false breakdown. So I would actually be buying it for different reasons, but that's good because when you have a certain reason, I have a certain reason. That means traders from all walks of life, from all points of the world, since you happen to be on the exact opposite end of the earth that I'm at currently, we're both seeing the same thing, and that would make it bullish above 52,000.
Question. I mean, we pulled back 30% from the highs. Are we using crypto? Are we using memes to look through the looking glass into 2022? The Fed are going to stop their QE program. Other central banks are pulling back on theirs. Are these once liquidity beneficiaries going to struggle more as a result of the lack of liquidity? Are these a leading indicator for what life looks like in 2022? We don't have enough time now. I can hear the bell going off, but you can, there's a question that we've got. Is crypto, these liquidity beneficiaries, memes, GameStop, all these kind of places, are they showing us what life looks like in 2022 under a non-QE environment? I think that's something that is really interesting for clients as well.
That is something I'm going to be pondering about many hours after we are finished here. So
there you go.
All right. Let me take you to the US dollar Canadian. I told you we were going to talk about it again today. And the thing about the dollar Canadian, I don't know if you can see that last candle there, Chris.
Yep.
That last candle, that's a pin bar, sure. Shooting stars. It's hard to get a shooting star in the FX market. Gravestone doji, some people may translate that as. I'm just going to say it's a failure above 129, which we've seen multiple times this year. And I'll tell you, I don't mind being on the short side while we're below 129 now. And I know you kind of got me a little thinking about the dollar here, but at the same time, can we be in just more of a range? And you can talk about OPEC, but I look at crude oil, and crude oil looks like it's going to stage a bit of a continued rally recovery, maybe into the high 70s. And if that's the case, maybe that dollar Canadian might find its way back to the 50-day moving average. The same thing that I said last week, but what it did do today is it proved that it is a failure above 129. And being that it keeps failing up there, I'm not sure I want to be long, especially with that false breakout. I told you I was watching price action today. That false breakout really got me thinking, I don't know. And also now we're past the FOMC. We don't have the Bank of Canada we have to worry about. So now it's all about risk aversion, risk appetite. And if stocks continue to stage that end of year Santa Claus, I'm sorry, I forgot. I shouldn't be saying that. So that end of year rally, that grind higher, the FOMO trade. If everybody's following that trade up, then maybe the dollar Canadian has some downside here.
Yep.
I don't think we're going to 120 again, but could we see 127, 126? I don't think that's out of the realm of possibilities.
Yeah.
What do you think here, Chris?
Yeah, look, I mean, the pin bars, I mean, it's kind of like a similar situation as the Aussie, right? We don't have the the same price action and the rejection from those highs that we did in the Aussie. But we're waiting for that Aussie to close above 71.72. And again, that would be thematic of this continued dollar selling, this risk-on mantra that we're seeing through, real rates pushing lower. And in that environment, what you're going to see is exactly the same as the Aussie is going to push higher, is that you're going to see a follow-through from the shoot, or from the pin bar reversal. And that's the cue to get short. So for me, I'd be looking at stop orders or sell stop orders just below the low of the day's low. And effectively what you're doing is, in the new session, if that pushes through that low, you're taking a ride and hitching a ride, that dollar weakness comes through. So it's a momentum trade. What you want to see with those big reversals that you see there is that the structure has changed. The dollar bulls were very firmly in control. The bears are showing their hand now. The question is can this actually change? Can the structure continue to do it? So I would use weakness as a momentum vehicle to continue to push down. If it bounces, so what? The dollar rallies. But if it continues, I want to be part of that trade, and that structure, that chain of ownership is very much there as well. So really interesting setup you've got there, Blake. We've got the rejection, you've got the pin bar. Now, can it follow through? And that's probably what I'd want to be part of as well. But let's go to the final section where Blake and I are going to give our plays of the day. What continues to be this risk on, risk off mantra. It's a horrible saying. We've kind of developed it many years ago, but it's very true. Markets aggregators of sentiment. We work on fear and greed. And that's kind of what we're looking at. A lot of what we're talking about today is kind of risk on, risk off. I talked about the Aussie dollar. We'll have a look at Aussie yen. Aussie yen has actually broken and closed above that consolidation. It's made a higher high. We've gone through the 100-day moving average, the 20-day moving average. The 5-day exponential moving average is starting to move higher. I want to be long in this position now. I've talked about the Aussie wanting to see it close against the US dollar above that level. Well, we've actually got that now in Aussie yen as our forward-looking predictor of sentiment. So I think, if we do see a reversal in the dollar, if we do see bond yields moving higher, then Aussie yen's going to go lower. But I'll put a stop on this one about 50 pips away. That's half an ATR. It's quite an aggressive stop. But it's also in line with the one-day implied volatility move that we're seeing there as well. So if I'm wrong smalls, and I'm going to get cut out, but that will probably coincide with a much stronger dollar. But I want to run this one up into 82.50 and into 83, and apparently that will continue to go higher. But I've got a stop loss in this trade at 50 pips. That protects me if we do see this risk-off situation that could happen. The market takes a different view on the Fed meeting, and I just want to run this higher because this is broken out now, and I want to be in that position as well. So what do you think on that, Blake?
No, hey, I like everything, all Aussie, all everything. So I'm in. I like it. This is one of those trades that I wouldn't mind trading as well. And, one of the things that I like about that Aussie yen is that I like the fact that the dollar yen is trying to make it back above 114. We've got the 112.50 holding in the dollar yen. That's supportive. The Aussie is very supported on dips above 71 cents. So that translates into an Aussie yen that looks bullish. So I like it.
Good stuff. What are you looking for?
Yeah, I don't want to fight it. I'm going to take you into my trade of the day, which is going to be the Euro Swiss. Now, you and I, Chris, a few weeks ago, before we had our first episode of the trade-off, I tell you, we were talking about the Euro Swiss and about how beat up it was. And it's finally, in my opinion, starting to show some signs of life. We have the ECB and the Swiss National Bank tomorrow. I always tell our traders, I'm not a big fan of buying Swiss francs. I'm not, they intervene. It's overvalued currency on many metrics. I just don't like being long the Swiss, although it has been very strong. There is an opportunity, I think, near these levels to be on the short side of the Swiss franc. And so I'm trying to get long. Actually, probably overnight, I'll have some orders that are below the market, closer to 104. I don't want to risk below 103.80. I think it's starting to carve out a higher low. And the fact of the matter is, if we can break back above the 105 level, that previous breakdown point, that's that big blue line. You can't see it if you have to keep going to the left to see it. We get back above 105, 105.10. That is going to be a bullish move. In my opinion, it's going to take us back towards the 200-day moving average. Yep. I'm not saying this is going to be a trade that I'm going to be long for the next several weeks. because it's going to take several weeks to get back up there. But I believe back above 105, it is bullish. 105.10, 105.20, it is bullish. I am trying to get long a piece. I know it's counter trend. I want to take a small position here. I want to add to it on a break back above 105.20. And if I can get long, but that's how I want to play this. I think it's oversold. You see the relative strength diverging. What do you think of this as a setup?
I think good setup. I wouldn't be in the trade myself just because I just don't want to have any exposures ahead of the European Central Bank. I just think it's too crazy. I have no idea what Lagarde's going to do. I think the risks are skewed to a stronger euro. I think, I think that I'd rather be long euro Swiss than short. But at the same time, she's very unpredictable. The ECB are very unpredictable. It could go either way, and you've got a big volatility event, a potential volatility event inside you there. So, a difficult one to be long over that. But I think the risks are probably skewed to a stronger euro. We'll have to see there. But that's all we've got time for, folks. Blake and I have discussed all the mad world of trading. We've talked about the Fed meeting. Can this dollar weakness continue into the session ahead? I'm not so sure it will. But we keep an open mind, and if it continues to sell off, there's some great trading opportunities in Aussie dollar and dollar CAD that Blake's talked about there as well. And we'll revisit some of these ideas as we go through the new year. Now, we are on a bit of a break until post-Christmas and into 2022. So we'll hopefully, you obviously have a great Christmas if you're going to celebrate it, and have a good festive break. And we'll see you in 2022. So good on you.